The dollar comeback is well and truly still in play. How higher is this going to run? Guys, Ken Chigbo back with another EX Market Fundamental update. Let's jump straight into this. So 2 consecutive weeks to the upside now for the greenback as momentum really pushes back into the favor of the dollar bulls. Why? So the last couple of weeks, we've had a few key fundamental reasons as to why we've seen a sentiment shift back in towards the favor of upside for the greenback. And that's because we had the geopolitical tensions, right? Tensions remain extremely high in the Middle East, almost at boiling point at one point with missiles going back and forth from Israel and Iran. Okay, so very high uncertainty there, and obviously supporting safe haven flows. Remember, the greenback is the reserve currency of the world. The dollar's reserve currency of the world. Everybody does business in dollars, so demand's always going to be there. That's why it's a safe haven, and it's attached to the largest economy in the world. Okay, so we had safe haven flows there, and then economic data, right? Non-farm payrolls, a decent amount of jobs being added. Remember a couple of weeks ago, let's just refresh our memory here. I know we went over it before, but we're just painting a picture for this dollar upside that we're seeing. So remember, we had decent amount of jobs being added to the economy. Unemployment rate remains low. And then the average earnings also high at 0.4%, higher than expected, and the previous was revised higher. So good data there on the labor market front, which is inflationary, right? So all penetrating growth for the economy, penetrating prices of goods and services. So inflation remains higher. So less reason for the FOMC to rush and cut rates as the markets have been, hoping for, trying to price in another 50 basis point cut, which is just certainly absurd. And then last week, okay, we had inflation data where, as you look here, inflation remains sticky. And are we surprised? 0.3% on the core there, remaining sticky. The month-on-month, 0.2% sticky. And the year-on-year cooled slightly from the previous to 2.4, but still above market expectations. Still not warranting 50 basis point cut. Now, look here. Before, okay, a 50 basis point cut was a 60% probability, over 60%. Now you can see there's a 0% chance that that's going to happen. Markets are now expecting a 25 basis point cut, 89.5% probability there as pricing by the market. And you can see the path here that I've laid out for the dollar, right? Remember, we had the upside for start of 2024, then that downside come July because of markets trying to price in rate cuts from the FOMC, which they delivered. But then we started bottoming out. You can see really nicely clearly on the daily. We broke out of that upper part of that range there at 101.80, okay, into that psychological 102. Open up the doors as we broke through that towards 103. And you can see just really nice and clean. It's been clean, okay, very clean to trade. Obviously on the flip side with Euro, of course, with Euro heading to the downside. But look, flag breakout. Now we've got this bit of consolidation here subject to another potential breakout. So the favor and momentum is well and truly with the dollar bulls, with sort of the fundamentals and the technicals there, just both going hand in hand and driving this to the upside at the moment. Expect some volatility for the euro because we do have the ECB rate decision where they are expected to cut rates by 25 basis points. That is largely priced in by the markets, but there are a couple of dissenters that have been pushing back on that market pricing because markets are expecting rate cuts back to back in the next 2 decisions from the ECB in terms of 25 basis point. But there are some dissenters in the ECB, that are, pushing back because it seems that they're more focused on bringing inflation down as opposed to worried about growth concerns. Now, it's very important to note that we've gone over this over recent videos, haven't I? I've said it, how there's a slowdown in the Eurozone economy. Markets are blanketing it right now, and they've just been focused on the FOMC. But really, when you look at the Eurozone, when you look at key data points, growth we're seeing slow down. The key manufacturing and services PMIs have been largely slowing down. This inflation is cooling as well. So, but we're seeing a real drop in growth, real drop in key growth indicators, in my opinion. So for me, okay, obviously markets are pricing 25 basis points, but what happens thereafter, it's the outlook. Okay, how dovish is Lagarde going to be? And really, if we're talking about my opinion, I think that they need to be dovish, okay, given the growth concerns around the Eurozone. Inflation's coming down anyway, okay? So they leave the door open for more action. If they don't, okay, say for example, the ECB do not cut rates at this decision, you're going to see a sharp move to the upside for euro, but that could be short-lived. Now, I'm giving you my view on this. If they did that, okay, markets will see a bounce in euro because obviously it's pricing that they're going to cut. Euro will strengthen. But then once it kicks into markets' heads and they stop being narrow-minded and they focus on a bigger picture where we're seeing a slowdown in the Eurozone, them not cutting is concerning because the Eurozone economy needs it. We're seeing a slowdown in growth. They need that cut. So maybe there's initial spike of strength to the upside if they don't cut. But then as markets, that sets into markets' minds, then we see that sell-off. Now, if you look at euro, I've been really capitalizing on some shorts. On my side, we had this running into big psychological resistance there at 112, right? You can see that topping out on the weekly, nice reversal doji, really clean on day. Look at that, like M structure, one peak, the neckline, second peak, break of that neckline at one psychological 110 and just left it exposed. And when you look at the 4 hour, really clean stuff where we've been, drop it down to the hourly, you see as well, breaking out these flags, breaking that flag, bit of consolidation at the moment, trying to protect 109. But if we break 109, it's going to see quite a fast drop towards 108. Okay, so plenty of volatility this week, of course, for the euro. Also expect some volatility with the Canadian dollar because we do have key inflation data in the form of CPIs. And it's important because the Bank of Canada are currently in a rate cutting cycle, right? So they're one of the central banks that have been consistent with cutting rates, okay? Obviously, that's a negative for the respective currency. Now, we're going to keep an eye on these CPIs. CPI, when you look here, and it's due out on Tuesday, it's expected to remain unchanged, really, when you look across the board there. So really, obviously, if those numbers do disappoint, i.e. they come out lower, there's going to be some room for some CAD weakness. Now, obviously, we just look at versus dollar as a base case. You know, I've been talking about this for a very long time, dollar CAD. I'm just waiting. I'm waiting for this potential breakout to the upside, especially if we get that growing divergence, you know, with a faster softening Canadian economy versus the US, but then also the Bank of Canada, they are cutting faster than the FOMC right now. I know we had a 50 basis point from the FOMC, but they could be cutting faster, and it just creates that economic and monetary policy divergence. So when you look here at dollar CAD, I'm really interested in just, I enjoyed some longs on this last week, okay, because we came down to this key support. You see, as part of this narrowing triangular structure, this range, we came down to support there. And you can see it really nice and clearly on the daily as I traded. We had the double bottom 1, 2, and the neckline there. You see that? Nice, clean little breakout and retest on that wick there on a daily, and just push to the upside. So now, obviously, we keep an eye on how the price, because we're going to start running some supply heading into this psychological 138 area in towards 138.50. If we end up breaking out and retesting that, boy, I've said to you guys already, this is going to fly. Okay, we've seen it before. If we can clear this zone here, this is going to fly. So keep an eye on that CPI data on Tuesday. Expect plenty of volatility as well for GBP because we've got a number of key economic data points from the UK. If you look here on the calendar, we've got CPI on Wednesday, and inflation's expected to cool down towards 1.9% from 2.2%. Remember, we had what triggered a big GP sell-off within recent weeks was dovish commentary out of Bank of England Governor Bailey, who said that there could be more aggressive rate cutting as we move closer towards their inflation target, which we are. You know, we're at around that 2% mark. Okay, and then of course we're also going to keep an eye on, ahead of the CPI Tuesday, we've got claimant count change, all right, and the UK unemployment rates are worth noting there, and also retail sales. We're expecting a contraction in retail sales. There is a bit of concerns about a slowdown in the UK economy as well. Expect a contraction in retail sales. So I think to the downside, risks are to the downside for GBP this week, especially if these data points, as you can see, are expected to cool, get us closer towards those Bank of England rate cuts. Now, if you look at GU here, it's really nice. Similar to Euro, right? We had been structured to the upside. We formed a nice evening star, validated by that closure below a couple of weeks ago, and then obviously continued selling. You can see the way we're topping out. It's very similar to Euro, right? The price action. When you go to the 4 hour here, we had a bit of an M1 peak, second peak here, up here around 134. Neckline was here, breakout and somewhat of a retest there around 133. That neckline psychological, again, is very similar to Euro. And then just trending to the downside, really clean to trade. Nice big breakout of a flag there. We've got this period of consolidation, but we've been grinding. Another flag here, which is subject to some further downside. Guys, there's very, very heavy demand at 130. But if the dollar continues momentum to the upside as it has been, and we get this negative GDP data this week, there's no reason as to why that can't break 130. And I'm sure there are a lot of stops there that will be triggered potentially to the downside and really exacerbate that move to the south, okay? Outside of that, you've got other data points with Australian labour market data and New Zealand as well, CPI. Other than that, have an amazing and blessed week. Plenty of volatility. I'll catch you on the next video.